Hello everybody. In this video, we will be talking about common size financial statements. Now, what are common size financial statements? These are the statements which indicate the relationship of different items of a financial statement with the common item by expressing each item as a percentage of that common item. The figures of these statements are shown as percentages of total assets, total liabilities, and total sales, respectively. This analysis is also known as vertical analysis. Now, moving on to the features of common size statement. A common size statement analysis indicates the relationship of each component to the whole. It is used for vertical financial analysis and comparison of two business enterprises or 2 years of financial data. Absolute figures from the financial statement are difficult to compare, but when converted and expressed as percentage of some common item, it becomes more meaningful to relate. Common size financial statements are of two types: common size balance sheet and common size income statement. Let's talk about common size balance sheet first. A statement where balance sheet items are expressed in the ratio of each asset to total assets and the ratio of each liability is expressed in the ratio of total liabilities is called common size balance sheet. Thus, the common size statement may be prepared in the following way. Total assets or liabilities are taken as 100. The individual assets are expressed as a percentage of total assets, that is 100%, and different liabilities are calculated in relation to total liabilities. Now, let's have a look at the example given. Prepare common size balance sheet of XRI Limited from the following information. Now, equity and liabilities is given, which includes shareholders' funds, non-current liabilities, and current liabilities. And again, their total is given. And on the other hand, assets, which includes non-current assets and current assets, are also given. So in this question, we are supposed to calculate or prepare a common size balance sheet of XRI Limited. Now, let's have a look at the solution. Common size balance sheet as at 31st March 2014 and 31st March 2015. It means we are comparing the data of 2014 and 15. So we will start with equity and liabilities, which firstly includes shareholders fund. Now, shareholders fund have been further classified into share capital and reserves and surplus. In 2014, the value of share capital was 15 lakh, and in 2015 it was 12 lakh. And in case of reserve and surplus, in 2014 it was 5 lakh, and in 15 it is 5 lakh. Now, moving on to current liabilities, that is long-term borrowings, which is 6 lakh and 5 lakh respectively. And the last one is current liabilities, which includes trade payables as 15 lakh 50,000 and 10 lakh 50,000 respectively. Now, the total of 2014 and 15 of equity and liabilities is 41 lakh 50,000 and 32 lakh 50,000. Now, moving towards the percentage of total assets. Now, how will we calculate the percentage of total assets? In case of share capital, we will write 15 lakh divided by 41 lakh 50,000 and multiply it by 100%. It becomes 36.14%. And on the other hand, in 2015, we will write 12 lakh divided by 32 lakh 50,000 multiplied by 100, which comes to be 36.93%. And same will be applicable on other items of liability side. Moving on to the asset side, that is non-current assets, which includes plant and machinery as 14 lakh and 8 lakh, goodwill 16 lakh, 12 lakh, and non-current investments as 10 lakh and 10 lakh. And lastly, inventories, that is 1 lakh 50,000 for 2014 and 2 lakh 50,000 for 2015. Again, the total is 41 lakh 50,000 and 32,50,000 for 2015. Now the percentage of plant and machinery will be 14 lakh divided by 41,50,000 multiplied by 100, and in 2015 the plant and machinery is 8 lakh. Now percentage will be calculated as 8 lakh divided by 32,50,000 multiplied by 100, which comes to be 24.62%. And we will calculate the remaining with the same formula, that is the value at current year and divided by the total value of assets and multiply it with 100. Now let's move on to common size income statement. The items in income statement can be shown as percentages of sales to show the relations of each item to sales. Thus, the common size statement may be prepared in the following way. The sale is taken as 100%. The individual items are expressed as a percentage of total sales, that is 100, and different items are calculated in relation to total sales. Moving on to an example, that is, from the following information, prepare a common size income statement for the year ended March 31st, 2014 and 15. So the different values are given in the question, that is net sales, cost of goods sold, operating expenses, non-operating expenses, depreciation and wages. Now the values are given for 2014-15 and 13-14. Now let's have a look at the solution. Common size income statement for the year ended 31st March 2013 and 31st March 2014. Now we will start with net sales, that is 25 lakh and 18 lakh respectively. Now as we have already discussed, net sales is the base, so the percentages will be 100% and 100%. Now we are supposed to subtract cost of goods sold, which is 12 lakh and 10 lakh respectively. In order to calculate the percentage, we will divide 12 lakh by 25 lakh and 10 lakh by 18 lakh multiplied by 100. The value becomes 48% and 55.56%. Now what we get is gross profit, which is equal to 13 lakh and 8 lakh. Now the percentages will be 13 lakh divided by 25 lakh and 8 lakh divided by 18 lakh, which becomes 52% and 44.44%. Now we are supposed to subtract operating expenses. Now operating expenses are 1,20,000 and 80,000. Again the percentage will be 1,20,000 divided by 25 lakh, 80,000 divided by 18 lakh, which is 4.80% and 4.44%. Now at the end what we get is operating income, which is 11,80,000 and 7,20,000. The percentage is 47.20 and 40%. And at last we are supposed to subtract non-operating expenses, which is 15,000 and 12,000 respectively for 2013-14 and 14-15. The percentage will be 15,000 divided by 25 lakh multiplied by 100, which is equal to 0.60%. And in 2014-15 it will be 12,000 divided by 18 lakh multiplied by 100, which is equal to 0.67%. At the end, what we get is profit, which is equal to 11,65,000 and 7,08,000 respectively. And the percentage of profit is 46.60% and 39.33%. Now, the point to be noted is the wages is part of cost of goods sold. So, we will not show the wages separately because it is already included in cost of goods sold. And in case of operating expenses, depreciation is always included in operating expenses, so depreciation will not be shown separately. Thank you.